Hey everybody, welcome back to another segment of Ask Alex. So we're gonna be getting a little bit more nitty gritty today. We've been having some great, guest appearances, some good segments. We've been getting great feedback. As always, if there are questions that pop up from this video, past videos, anything really financial, retirement related, do us a favor, drop a line in the comments, send us a message. We're here to support you, and as those questions pop up, we want to have that give and take two-way street. So please feel free to, again, make comments, send us messages, any questions or concerns you have, and hopefully it will pop up and do a nice video for you. Today I got an exciting one. This is kind of a two-wayer, and what I mean by that is this is really a starting video on, hey, how do you start investing? And really the start of an investment plan is really setting up a savings plan, okay? And what I mean by that is this may be for some of you adults who, got a late start, had, you were parenting, had the day-to-day hustle and bustle, and you might be a little bit later in your 30s or your 40s and you feel like, hey, I gotta catch up, right? One thing I will tell you on that front, every single family I sit down with, including myself, there's always water under the bridge. Hey, I could have done this different. I should have done that different. But the greatest thing to do is start taking action, okay? The other kind of demographic I'm talking to is maybe you are in retirement or close to retirement, a parent, a grandparent, and you're saying, hey, how can I get my grandkids or my kids going, starting to do something now? Because as we all know, Social Security is gonna look a lot different, and that emphasis and that importance of younger generations starting now has never been more paramount. So maybe you share them this video, maybe you send them, hey, so go talk to Alex over at Foguth, because sometimes what I've identified is hearing the same thing from a different voice that's not a parent or a grandparent often goes miles and miles. So let's start here. How do we start a savings plan? How do we start investing? What are some basics? So this is one of the things I talk about again with younger families or families just getting going. First and foremost, if you work at a employer and they offer you an employer plan, 401k, 403b, always max out the match. And that might seem basic to you. Oftentimes, there's gonna be a percentage. Hey, we're gonna match up to 3-4%, whatever that looks like. There's some really great programs, specifically with like the University of Michigan. They have an amazing match system, right? Our wealth partner. But anybody who has an employer plan, understand what your match is, and let's just say they're gonna match you up to 3%. At an absolute minimum, put the 3% in. That's the first and most important thing you could do. I hate those old cliches, but it's true. Don't pass up on free money. Okay, so that's the first thing. The second thing, I always like to talk about, hey, start getting money into your Roth IRA. Here's a really basic principle of a Roth IRA. Sometimes when I talk about Roth IRAs, people will say to me, Alex, what type of investment is that? It's not a type of investment. It's a type of money. So when people break down 401k, 403b, Roth, these are all can be a stock, bond, mutual fund, any type of investment, annuity, CD. All it is explained to be and why it's designed is it's understanding. The IRS wants to know, have we taxed it? Is it tax deferred or is it tax free? Why do I put Roth number 2 on my list? Well, it's tax free. You pay the taxes first, you put the money into the account, and then it grows tax free. Because here's the real question. If you had an account growing for 20, 30, 40 years, right? And you're getting 10, 5, 15, 20%, whatever that number is, would you prefer at the end of that, when you're 60, 65, 70, 75, whatever that looks like, when you pull that money out, would you prefer that it's tax-free or would you prefer that you pay taxes? I think we all know the answer to that. So that's that Roth. Now, a couple things to understand about the Roth. Number one, if you are under 50 years old, at this moment in time, and this usually changes from year to year, you are able to put in $6,500 a year if you're under 50 years old. That is your annual contribution limit, okay? If you're over 50, you can do $7,500 a year. Very generous, right? They give you an extra $1,000 you can put in. So if you're under 50, $6,500 a year is the limit right now. If you're over 50, $7,500 is the limit. That is the second most important thing you should be doing. Now, this is where it kind of gets more complicated. And I always talk with clients, again, younger families, families just getting started. There's a lot of dealer's choice here. The family needs to make some decisions. There's gonna be certain investments that you gravitate towards that make more sense or more comfortable with. There's other investments that say, you know what, I'm not really sure about that. That one's not for us, okay? So let me just kind of go through this. The third thing I would throw at you, at least, and I'm gonna kind of walk you through what my family priorities are, is then going back to your 401k, IRA, 403b, and maxing that number out for the year. So one of the benefits of having an employer plan is they allow you to save more than if you went and just opened up an IRA in your own. They're gonna give you higher limits. Right now it's right around $22,500, and it goes up again if you're over 50. Okay, so if you have questions about that, please reach out. You can also contact your HR department at your employer. They should be able to talk to you about it. So maxing out. So number one, we're gonna hit the match and we're gonna max that out. Number two, we're gonna start funding a Roth IRA. Okay, and in a perfect world, you max that out. Three, you go back to the 401k or 403b and you max that number out for the year. Then the next bucket I like for my family is what I call non-qualified or a brokerage account. This is not technically a retirement account. This is an account where you can go buy your stocks, bonds, mutual funds, CDs, whatever it is, but it has liquidity to it. What do I mean by that? You don't have to be 59 and a half to tap into it. So for me and my family, and I'll kind of get there in a second, we're often into the real estate, the rentals, and all that stuff. So what I often will do is I will put money into my non-qualified account that once I get through these three and I max these out for the year, I then start putting my extra money into my non-qualified account. Why? Well, let's say it's a year, let's say it's 6 months, let's say it's 5 years. You know what, I'm gonna go buy this house, I'm gonna get a cottage, I'm gonna try to buy a rental. You can access this account before 59 and a half, but also participate in the stock market, okay? And again, you can put it into CDs, fixed annuities, things that are safer, but again, it doesn't have that same rule with 59 and a half. And then real quick, I'm gonna go through a couple others. The next one I put on the list is something I call an IUL, Indexed Universal Life Insurance. This is probably the most complex one up on the board. What this is this can be used a couple different ways. In my family, I use this as an educational savings for my children. I open one up when they're 1 year old, and then we fund it for about 22 years. Now, I'm not gonna get into the depth of this one, but this is one if you ever to Google an indexed universal life insurance. Some of the cheesy nicknames they use for it is the rich man's Roth. Why? This can also become a tax-free pension if done correctly. So this is one I don't want to go too deep into, but for grandchildren, for children, creating something that they can use as adults as a pension, as a social security hedge, education, houses, weddings. This is a great account that has a lot of flexibility. Okay, so if that's something you're curious about, please reach out. That one would need a little bit more context to really give you the full package because these are more complicated, okay? It's an insurance product. It is more complicated, but is a great tool that I use with my own family, as well as myself and my wife. Then we get into my favorite, which is real estate. Now, I am not a real estate agent. I have nothing to do with real estate. However, it's a great tool for diversification for me pertaining to, hey, when I retire, I'm gonna have some rental homes, and those are gonna act as a pension to me. So there's some basics that you can really get into, but if real estate, Airbnbs, commercial, all that is something that's on your heart, this is a great place to look at. And then lastly, I'm gonna say private investments. And what I mean by that, historically, private investments are gonna be the riskiest thing you put your money into. It's usually not on the open market, right? And let's just say you have a friend and he's opening up a pizza shop or something like that, and you say, hey, I'm gonna invest in that. That has a lot of risk because you don't know how much effort they're gonna put in, how profitable it's going to be. So understand that the private placement or the private investments can be a very risky place to go, but absolutely can fall into some really good areas. So this is what I call my savings priority for my family. Every year I'm going down this list, and keep this in mind. In the beginning of this process, you might just start here. Hey, I'm gonna get that 3% or that 4%, I'm gonna get my match. And then it's a couple years later, you get a raise, you're doing better, you maybe cut down on some cost of living, and then you can start maxing out your Roth. And then it's 15 years later, and you might be all the way down to here, and you have all of these set up. That's what a good, sound savings process should look like. One other really important thing to understand is you need to understand your month-to-month budget. How much does it cost you to live, right? What's your normal entertainment? What's your travel kind of budget once a year? And then you say, hey, I understand my expenses, I understand my cash flow coming in. That's where it should always start, because that's gonna give you something that's really important. How much extra money do you have every single month? And then that dollar figure should be getting plugged in with here, along with making sure you have an emergency account, your bank, right, your credit union, whatever that looks like. So these are some really basic principles that I will talk about historically, kids, grandkids, but also families who are just getting started. So I hope this gives you something to think about. If you have specific questions or you have people that you think it would be worth to get this in front of, go ahead, share this with them. And again, we're always here as a resource, answer questions, help you out setting this stuff up. I hope this helps. And again, this is kind of the, hey, how do you start investing? Savings 101, if you will. And again, I hope this gave you something to think about and get you started. So God bless you. Have a great day, and we'll see you next time.